Good morning, everybody. How's everybody doing on this fantastic non-farm payrolls day? Today is Friday, February the 3rd. It is currently 7 minutes past 8 a.m. Eastern Standard Time. We have the news coming out in about 23 minutes. So before we do get the actual print, we're going to go over a few things real fast. All right. Thank you guys all for being here first and foremost. If you are new to the channel, welcome. For everybody else, welcome back. My name is Heath, and this is the official Trade Talk channel where I show you how I analyze price for the most consistent and higher probable entries to help you guys become better traders. I got this pulled up here. It's the exchange net position change. Exchange net position change. This is the last 5 years worth of data. So pretty much, the major bear markets that Bitcoin has had. You can see that the largest spike, these spikes occurred in sell side volume during the pandemic. And then again, naturally, as price was breaking out above, highs, you will tend to see a lot of selling occur there, as well as smart money is exiting profits in their positions, right? So there's a lot of selling going on there. The reason I got this up is because there's a little confusion as to capitulation, what people look for when they're looking for capitulation, and why we were so quick to consider the FTX debacle as the capitulation move. And you can clearly see there was the most selling Bitcoin has ever seen in Bitcoin's entire history done during that debacle. So essentially, when you get an exhaustion of selling pressure, demand kicks in and you get those spikes. And we've seen a nice spike on Bitcoin for the last little bit. And then this is Bitcoin's entire history of data. I mean, there is no doubt, no doubt about it, that we did get some capitulation there. All right, so let's move on here. So this is what we're currently looking at on Bitcoin and what we're currently thinking about for today's events. We're going to go over here to what news is coming up. There are several data points that people are going to be looking at today. You got non-farm payrolls. That's going to be an important number, but most people are going to be looking at average hourly earnings instead. They're more concerned about that than the actual payroll number. They're also going to be looking at unemployment. Now at 10, which I highly doubt we will be live still at 10 o'clock, but at 10, another important data point comes out, and that's going to be the ISM non-manufacturing PMIs. It is more important now, probably more or less more important this time around than it has been, as far as I'm concerned, right? But you can see the last prints that we've gotten were above 50%. We're looking for, we want lower. So like a higher than expected reading. They're expecting 50.4%. If you get like 50.5 or anything higher than that, then that's going to be taken as potentially bullish for the dollar. Now, one thing I want you guys to understand is simple. I don't know why I'm losing my voice, by the way. You just have to sit with it. But one thing is simple. When we get these news prints and this high volatility in the marketplace, we never know what the market's going to do. But there's also times when we think we know what the market's going to do because we know how the market should react to some of these news headlines. But several times you get the news, it's the news you're looking for, so you're expecting this, and then the market does the exact opposite. All right, so there's the news, there's the market's reaction to the news. So those are two things right there that are very, very important. If everything comes out in line today, if everything comes in line with or lower than expectations, then we would be looking to buy the lows on Bitcoin today. If we get a low spike, we'd be looking for a push down into maybe some support somewhere, or take out the daily low, so that way you can snipe any liquidity that was given to the marketplace during the London session. You can see here that the London session did indeed set the low of day this morning, as it usually does. The London session usually makes the low or high of day. It's not always, but it does it often. You can clearly see right there. There's your daily low, and it has been set. So we are trading currently up into intraday resistance, and we're at the highs, trading at the highs of the current daily range. All right, so we're not at the high, but like when you're above the midpoint of the daily range, then we consider that being trading at the highs. So whenever you hear me say we're trading at the highs or we're trading at the lows, that just simply means that price is at the highs of day or around the highs of day. And we are currently trading around the high of day at 23,544. Yesterday we did get a little bit of crazy volatility. We did try to take a day trade, but it was at an area that, wasn't a high probable scenario, and we ended up eating a stop. And if we go look at some more data over here, you can see that we are not at any high probable areas. You got a daily support here, and it's only daily support because it's yesterday's close. That's it. You got daily res setting up there at 23,745. The daily high 23,595. Daily low 23,318. So not really moving it at all today. Yesterday looked like it was going to be a bullish breakout day, but ended up closing bearish on the day. However, that's not that important because it didn't take out any major levels, and you stayed above the midpoint of this candle, right? This candle. This is your push candle. This is your trending candle after the bearish stuff we had here. This candle pushes right back up into resistance. So this is the last expansion candle that we have, or trending candle that we have. And yesterday you took out the high of that, which set new highs for the month of February, as well as taking out January's high. So any liquidations that need to occur above any highs has happened. Sorry, I'm trying to get it situated here. So any liquidation that needs to happen has happened, and you can absolutely get a move lower from here. So basically what that means is the market could take today's volatility, take today's news, and basically sell into it if it is looking for a pullback. Because like I said, there's resistance. So there's the area you would be potentially looking for sell side entries if you are a bear. If the news comes in line with expectations, then I think the trade is to look for lows to be a buyer. Typically, I don't like to buy ahead of resistance, and I do not like to buy at the top of an obvious trading range, especially after an explosion of volatility. I am not. All right, so let's move on. All right, down here we go. Let's pull up Eric Crown's volatility metric right here. Let's get Bitcoin back over there. So you can see here Eric Crown's volatility metric. I call it his because somebody in his community built the thing. It's nothing more than Bollinger Band data, as far as I can tell, with a few other things. But kudos to him because it works really good. You can see here, down in here, when we were buyers of Bitcoin, you were setting at very low levels of volatility. Now, this is a directional neutral indicator. What that simply means, if you are extremely new to trading and investing, is that means this indicator does not call direction. It simply gives you, when it goes up, that means a lot of volatility is coming in. And when it goes down, that means you're losing volatility, which you can see that in the price. You don't necessarily need the indicator to show you when volatility is high. If you are getting massive candles, that is high volatility, right? Big candles means big volatility. Little sideways candles means no volatility. So since the explosion, since volatility peaked up here, repricing in the FTX debacle, you can see that we have lost a lot of that volatility, and the market's kind of been chilling. We had a ton of data come in this week. So there is so much to interpret and to go over. I am going to do that this weekend. I will put out, or I want to try to get a video out to you Saturday or Sunday, reacting to a lot of big people in the space, their views on the marketplace, and where our views kind of commingle. So we're going to look for that video coming out this Saturday or Sunday, and potentially Monday at the latest. But anyways, let's go ahead and get our levels for today. As we have no volatility happening today. You are literally trading as a doji, but you have already began the trend by taking out yesterday's low. So as long as you don't close above 23,745, the threat to the downside remains, as this is a trending candle. When you take out one side of the market, that doesn't mean the trend is going to go that way. It just means that there is potential for it to go that way. All right. So yeah, this is where I'd be looking if I was a bear. If I was a bull, this is where I'd be looking for today's entries. Typically, this is a very high risk strategy that we are deploying. So if you are not comfortable with losing any money, then you definitely do not want to be participating in this move. Okay? Simply what I'm trying to say is when we take positions, there is a very high chance that you're going to lose money. Well, it's a 100% chance that you're going to lose money if you take a position, because the exchange charges you for that position. So no matter what, you're going to lose money. There is a 100% chance of that happening. So please make sure you're doing this with an amount of money that you do not mind losing. All right? If you're going to partake. The level that I want to see, what I want to see happen is simple. I want to see a spike to the lows on the news. Then I want to see the news come out at or under expectations on at least the non-farm payroll side and the average hourly earnings. Now, the ISM PMIs won't come out until 10 o'clock. So basically, whatever happens during NFPs could essentially be faded at the open or 30 minutes after the open, because you could get a higher ISM PMI, and if that happens, then that would be bullish for the dollar, therefore bearish for Bitcoin. So basically, what we're gearing up here for is a wick lower, and then we want to be looking to buy that, and we will set our risk under that wick, and hopefully we get a spike back to the upside to run to the top end of your operating range. The current operating range is small. It is very small. I'm not looking for entries at this white line. I'm just showing you basically where your profit potential lies. So if we were lucky to get a wick, which that would be a pretty damn big wick down to the low of day, then I would be looking to be a buyer upon re-entering the $23,318 area. And then I would be looking to throw my stop under that low. Probably wouldn't be instantaneous, because you can get another push lower and then go. It's just one of those things. If you are going to take it with a wide stop. Please only risk 1 or 2% of your total portfolio. So if you're trading with $100, please only risk $1 to $2 of that. But basically, if we do get that spike lower, we will be exiting or taking profits as price pushes back up towards 23,561. All right, that's the trade that I'm looking for. If you are a bear, you are looking for a spike up to here for entries. I know that's a pretty big spike, but at the same time, that's what you would need in order to take an entry, as that is daily resistance. Could you just take out today's high and roll over? Yeah, you could do that too. I don't know what price is going to do. I never know what price is going to do. I just know where to look for entries. That's what I'm teaching you. What to look for, when to look for it. Give me a second as I get my stuff over here situated. Very small range day. Very small range day. But I haven't seen anything that is suggesting that prices are going to go lower. Right? I'm not bearish. I just would love a deeper correction to buy, to get back in at a lower price, to re-engage the market with market buys. If you've been following me, which I'm sure most of you that are in here have, you know that I've been bullish since June of last year, while everybody else was looking for the sky to fall. We switched our bias from bearish to bullish, and we've been bullish ever since. Now, we have been taking downside day trades, but that's different, right? When I say overall on the macro, I'm bullish. I think Bitcoin's going to trade away from this area and potentially trade sideways to neutral all year long. Right now, you have already set in a pretty decent sized yearly range, seeing how you opened the year at 16,531 and are currently trading at 23 grand. That's a $7,000 move. That's a pretty big range. Yo, good morning, good morning. I use Bitget's platform to enter and exit positions on exchange. Bitget is not going to be useful for U.S. residents, but everybody else in the world can use it. If you do want to give Bitget a try, they have the cheapest fees than anybody out there in the entire world as far as exchanges go, and there's not much slippage. Like, I trade it all the time, and I usually get filled at the price I'm looking to get filled. So there is a link in the description. Please use code XTSC, that is X-Ray Tango Sierra Charlie. We're just waiting for the news. We got 2 minutes. There is a slight lag in the chat, but as soon as you future legends have the numbers, if you could post them in the bottom of the chat for me, that would be great. As investing.com lags on that front. I already know what I want to do, so I already know what I want to see. You know what I'm saying? It is what it is. I already have a plan as to what I think is going to happen. But what I think is going to happen and what actually happens, usually two different things, right? You can see yesterday we had a nice pullback on the dollar. So to stay in tune with what we want would be a DXY spike to the upside and then a fade on these numbers. 185K is the expectation for non-farm payrolls. Average hourly earnings 4.3%. Remember, we want lower, so we want 184. Anything lower than that, we want 4.2, something like that. If the numbers come in higher, then that's going to be bullish for the dollar. So we're getting our spike lower. I'm going to take a buy long right in here. Go ahead and throw my stop down at the low of day. Wait a minute. Now you can do that. Did not get a new low on Bitget. Did not get a new low here. So now my stop is out. If it pushes back down, I will be stopped out. I don't know what the numbers are. I'm just looking at price. Oh, Jesus. Massive, massive, massive loss. So go ahead and close that position if you wasn't stopped out. That's going to be very, very bullish for the dollar. That is a massive beat. We wanted lower than 185. You got 517,000. So that's going to bring in the bearish narrative. What is average hourly earnings? 0.3. That's not bad. This barely came. It's barely a beat. Yeah. So it looks like all in all, it's going to be a bearish day. That is, of course, if everything stays the same. As far as fading this move to the upside, I don't know if I would. That's a pretty big candle there. I expect continuation from that. I mean, you took out today's high with a massive move. So we could potentially look to sell it, even though we took a loss on that first position. You could potentially look for selling entries here around 23,433, as that would be your supply. And then your stop would be high of day, looking for short side to continue. As the only way I could see this being faded is if this comes way under expectations. This is a huge number. We were expecting 185 or lower. 517 is much, much larger. So let the retracement come in here. Your bearish target would be low of day. But we got to get it up here. And then hourly close above 23,433 would have you exiting or not even taking that position. So we'll see if we can get back some of that money. It doesn't mean the market has to take this as bearish news for continuation. I just think it will. Those numbers are going to be the talk of the day. That's huge. This is going to bring the bearish thesis right back into the marketplace. Did unemployment spike? No, unemployment is lower. So yeah, we'll have to just see how it plays out. It's even lower than last month's. A higher than expected reading should be taken as negative or bearish for the USD, while a lower than expected reading should be taken as positive or bullish for the dollar. It is lower than expected. Lower than expected. Lower than expected. So do not be looking to buy this dip. We don't want that. We want this over here. And we're looking for the market to push back up to and around this area here. That's going to be a very wide stop loss, but we may not even get it. We'll be targeting low of day. Yeah, they made no attempt to even run up to the high of day, which is strange. Usually they would have done such. Why would it go to 23,509? Well, wait for it there and then. I mean, if that's what you think is going to happen, obviously. We're going to be waiting for a supply check. And it's also old support. So since you have continuation, we got 22 minutes on the close. So it's not like we have to rush this. But you're going to have continuation. To the downside there would be your support. And supply is just above support. So there is no reason for it to trade any higher than supply. 22,509. Gotcha. Yeah, overall, we want a deeper correction. We want Bitcoin to come off. We don't want to be buyers up here. We want to buy value, and value means cheaper, right? You want to buy low and sell high. So before I reload up on some longs, reload up on those long positions, I definitely want to see a pullback. So hopefully this news will do that for us. But it's definitely going to have an impact on the market. The NASDAQ closed under supply yesterday. Under supply. 12,633 would be those places that you could potentially look for entries. You do also have an hourly supply right there as well. But you would just be looking for support around 12,514. First scale out has already taken place. So 23,433, risking 1% at 23,577. High of day current, high of day 23,595.35. So if we get a deep push above this hourly supply zone right here, you can also see that currently that is also the point of control. So I don't think you're going to see, maybe a spike up into 23,480, but this is where we're looking for short side entries. And then we'll rest the high of day. It's just stalling at support, though. That's why you're having difficulty moving any higher. $23,421 is support. But I want to see a tag of this level. I want to see a perfect tag and then a rejection. I know it's just a couple of dollars, but I've already eaten one loss. All right. So it looks like it's just going to hold off on support. Son of a biscuit. Look at that reaction off of support. It really sucks that that I'm waiting for 23,433 when just $10 down, I could have taken that entry. But we still have the open. So there's no rush on this position. The open is where the majority of volume comes in at 9:30. That's going to be the last chunk of volume. So you could trade sideways and crazy for another hour, potentially. You know what I mean? We don't have to rush. We don't have to be all jumping on every single market move. We wait. We let the market show us what it wants to do. Right now, we have a very heavy bearish perspective for today. ISM could change that, but I don't know if it will. That is a big, big, big difference. A higher expected rating should be taken upon. In this number, it just measures the change in the number of people employed during the previous month, excluding the farming industry, hence non-farm payrolls. Job creation is the foremost indicator of consumer spending, which is good for the economy. It's good news, right? The creation of jobs is always good, as long as people are taking the jobs. And that's a massive spike. So we haven't seen a spike like this since the 5th of August. Back on the 5th of August, we got a 528K reading. So while we're waiting for that, here, let's leave it on. Let's just leave it up. We'll do it down over here. We still got time, folks. The open is at 9:30. Please, please do not rush this stuff. And if we don't get another entry, that's better for me, as I tend to only want to lose money. Never. You know what I mean? I don't like to lose money. And I especially don't like to lose money live in front of people, right? As it shows people I am merely but a mortal man. I like it when people think I am something special. What was that date? August 5th. Right there. That's interesting. Very interesting. August 5th was that non-farm payrolls day that got a big spike, and it should have been bullish the dollar, and wasn't. So this is what I mean by you got what, we know what the market should do based on numbers we get, but then the market reaction doesn't have to be what we think it should do. So this doesn't mean that taking a sell trade is going to work at supply. It just looks like it should. If you look at that dollar down there, that's an hourly candle, folks. That's an expansion. That is a rather large expansion. And something very important of note here is that is what we wanted the dollar to stay under, 101,782. So last time we got a massive spike that should have been bearish for Bitcoin. It ended up being very bullish for Bitcoin. Strange. But they ultimately just used the data to roll it over because it wasn't very much longer and you were trading well under that price. What do you think about Michael Burry's sell tweet? I don't follow people. Cybercamp, Cyberamp. I make my own trading decisions based off my own analysis and data. I do not care about what other people do or think. So I haven't even seen his tweet yet. I was too busy getting ready for the day's stream, looking at crunching my own numbers. Because this is the prime time for me, because I trade Forex, stocks and options after 9:30, but usually I have already entered and exited my Forex trades. So I'm very busy from 7 to like 10. I usually don't start peeking into Twitter until after. So you'll have to tell me what he said. What level are we predicting the drop to? Ultimately, not today, but ultimately I can see Bitcoin retracing all of last week's range and getting as low as 21.8. Is that your last weekly resistance level? You blasted right through it. So I would like to see at least a correction back to there. A simpler thing to look for would be a pullback to at least the 21 exponential. Since we have this in here, this is resistance, your last daily resistance before you expand it out of there. So I expect a retest of 21.2. And the reason this is resistance is because it's a massive, massive supply zone. Right here. See this supply? That's a big supply candle that was made on a CPI day. No, not that one. Maybe here. Yeah, this one. Sorry. You can see how close they are, right? That was your last supply zone. It held price for 5 days, 4 or 5 days. So at the very least, I would like to see it test that for support. Right? We want to actually see demand come back into the marketplace. And that's one thing that we're not seeing, especially at these prices. By looking at this metric right here, the accumulation trend score, let me get rid of the moving average. So we had a lot of buying taking place after the capitulation, a lot of accumulation taking place then. But since then, we haven't seen any accumulation. So what does that mean? Well, it means if there isn't any accumulation happening, then you can expect at the very least a pullback in the future, right? Which we know the market doesn't just go in a straight line in one direction. It oscillates back and forth. It creates wave motions. Buying and selling, buying and selling. It oscillates. So we knew it looked like it was running out of steam. Several people were wanting to short it up here. It's just, I don't like being on the short side of an asset that is clearly bullish in the near term, especially an asset that has a lot of bullish momentum. Now that momentum waned, and usually when you get a waning of momentum, when you get a slowdown of bullish momentum, then you can start to look for shorts. But you were printing bearish divergence on the daily. You're just now getting back down to overbought, right? So, yeah, something like that would be where I would start to look to be a buyer again, back down near the 50. But I necessarily, like I said, I don't want to necessarily be a seller. There is opportunity in taking sell trades if to those pullback areas, but I find it's much easier for a community to follow if you're just looking for like one specific thing to take place. Because I have a community of people and they stay confused. When I take a short day trade, they're very confused. I thought you were bullish. They don't understand that I'm bullish on the macro, but on the near term, day trading, you can take, because I'm just looking for the move today, right? That's different. Which typically that's all I'm ever doing. I am never just buying and not setting stop losses and stuff like that. I'm always taking it on a day trade because I'm using the entire fund usually to take the position. So however much is in the account, I use it in 100% perpetuity, all of it, and I lever it up. Because when I get the expansion, the little 1-2% move that I'm looking for, I de-lever. I take profits and I move my stop to break even, and then I ride any continuation. So if you get, a few more days of downside, you can ride that with zero risk minus the unrealized P&L. Because you're always risking unrealized P&L. Always. This wasn't as big as a move as I thought you would get. It is on the dollar, but it's not on Bitcoin. So it's very strange. I figured, look at the daily range. It's still very small. In comparison to yesterday's range, it's tiny, much smaller. So there's still opportunity in this. We just got to wait for it. But right now, there's such a buy the dip mentality out there among the bulls like myself. People are afraid of missing out. So there's nothing that says that this move won't be bought up, right? Even though what we just seen should be very bullish for the dollar, should be very bearish for risk. They could ultimately view this as a pullback to buy. So there's a lot, right? There's a lot of things that can take place. in the markets. I think you're relatively safe if you're trying to ride the trend, like buy the dip for the overall trend. I think you're safe to wait for daily 21 tests, right? There's your daily 21, that yellow moving average. You're safe to wait for price to pull back to those regions. You can see here when the trend started over here, everybody up in here thought they missed it and that price was never going to come back, but it always does. Right in here would have been the buying opportunity, right? Then you would have caught that. So the market is extended a little bit, not so much on the S&P 500, but it is a little bit extended. Now the S&P 500 just took out yesterday's low, so naturally I expect a bounce from there. Is it a buyable bounce? Probably not. Not unless you're taking profits like right there, and that's literally a $4 move. We're going to see how Bitcoin reacts at 23,433. If my theory is correct, price will not close an hourly above that price. Will not. If we get an hourly closure above 23,433, that doesn't mean that my theory is wrong either. It just takes, it just takes the trade off the table. It invalidates my theory. And we've already eaten a loss. So I will be predisposed to sitting more on my hands than outright just throwing freaking orders out left and right. That's him a mess. And all right. Big move on the dollar. Almost 1%. Right here's the DXY. You're up 0.8% on the day. That's a big, big move for the dollar because it's usually the moves are like 0.5%. Anything over 0.5 is a very big or a large expansion. And expansion just means price range. Bitcoin's still, not even down 1%. This is a small, muted, very tiny move. Something's up. Something's up. That should be a much bigger move. You should have got a freaking nasty move lower. And it still may come. Hopefully it comes up here, tags supply for us, throws a wick up into there, fills any limit cells, and then instantly rolls over and begins to trade away. And hopefully that occurs at or around 9:30. And if we are still live then we might as well hang out till 10 because I would be wanting to take profits on that entry around the low of day and hopefully before 10 o'clock. Because that's another big news event that people will be looking at today. They will be looking at it for sure. It's not one that's usually relevant, but in today's current climate, it will be very relevant as people are trying to get themselves positioned as you're already the second month into Q1. It is starting to look more and more like the monthly high is in. So I mean, potentially you can look for short entries all the way back up to 23,746 on Bitcoin if you think February's high is in. With today's jobs number, that could very well be the case. The dollar is very much indeed extended to the downside. I mean, as it has basically only been going lower with a couple weeks of pullback in there, right? Just straight down. Every now and then you get a weekly pullback candle, and then immediately that gets faded. So in a big monthly support like this, you're printing a bullish weekly, bullish engulfing at a key support. A lot of bears, Bitcoin bears, are going to read this as a very, very, very bearish signal for Bitcoin. We do not, because the trend is down on the dollar. If the trend was up and this happened as support, that would be different. That would be a key, crucial signal. But not really in the current financial climate. But a pullback is needed. Did you see like some of the moves yesterday on bad earnings? Look at freaking Facebook yesterday. It's like a 20% move. What is that? 24% from yesterday, previous day's open to there. That's a massive move, man. On bad earnings. On bad earnings. So yeah, we're looking for a pullback in risk. But that pullback in risk will ultimately be a buying opportunity, in my opinion. The Dow is getting ready to be into an area of potential support. Right there, daily support, 33,734. You got the 21 exponential coming in there. Would I be a buyer there? Only if it shows me that it is indeed holding as support. I will not buy the first tag of 33,734, but if this shows me the ability to hold as support, then yeah, that would be a fantastic place to be a buyer looking for the next bullish expansion back up to 34.5. So we'll see how the markets take this. You got the news and then the market's reaction to the news. There could be a potential buying opportunity Monday or Tuesday on the Dow. We'll see. Take a look at EuroCAD. Yeah. Let's use Oanda. No gaps. Oh shit, I didn't mean to do that. Yeah, it looks like it's failing on resistance. It's failing at resistance. You attacked resistance yesterday and you closed down on the day. Today, you had a spike back up into resistance and you failed again today. So that is showing you that this area is indeed acting as resistance. Intraday, however, intraday is different. Not really seeing that selling pressure in the way of volume. So even though you got this move lower, this spike right back lower, you can see how much volume was traded at the lows, and you can clearly see that those are buyers because of how price reacted. So if this gets under here and takes out the low of day today, you could see a pretty decent sized move, probably down to 144,694, because those buyers will be stuck. That's why I say you don't ever want to be a buyer into resistance. You want to wait to buy off support. Yeah, if you get under this stuff right here, you're going to have a whole lot of trap bulls. A whole lot of trap bulls means potential retest of 2023's open. And as long as that area access support, that would be a decent spot to look for a buying opportunity. Dropping under that and holding it as resistance would be a selling opportunity on EuroCAD. Is there a trade to take on EuroCAD today? No, not in my opinion. I don't see anything that would make me jump on this trade. It is bullish and it's structured bullish. It's just into resistance. Like I said, it could hold support, and I remain holding the overall bullish bias on it as long as you're trading above that. So watch one spot 44,573 for potential support. A daily close under this would not be good, right? A daily close under that means you got to hold off because you're looking for a deeper correction. And then you get under 143775, then something else could be taking place. And remember, sticky inflation is basically the biggest risk for 2023. Sticky inflation is the biggest risk for 2023, so we could see a very choppy sideways market this year. And if that's the case, then we're going to be range trading. We are going to make money no matter what this year, no matter what the market does. No matter what the market does, we are going to make money. It had a rather large expansion as well. And you've lost that steam because you've been trading sideways for weeks. So people are trying to buy it up here, but that cannot be right. Wait a minute here. Something isn't right. So you're at the yearly open on the USD or Euro CAD. Yeah, losing this will not be good. That is why you are seeing so many people buy it. That is why you are bringing it to my attention. Isn't it? Yeah, I mean, that is why you're seeing people buy it. If it holds, man, you want to be a buyer. Anything under it, I'd leave it alone or look for selling opportunities, sell resistance, no matter what the moving averages say. Right? The objective technical levels hold a lot more weight than moving averages do. A lot more weight because they are showing you what the candle is actually doing. The yearly candle, the quarterly candles, the higher time frame candles. It shows you order flow. Got 15 minutes till the open. Bitcoin's doing exactly what we want it to do, which is trade sideways until the open. At the open, we are looking for a push. If you're just now joining us, at the open at 9:30, we are looking for a push to 23,433, and that's as high as we want to see it go. And then we're going to take a sell entry, and we're going to target the low of day. We're going to try to make back what we lost earlier, and then we will be done. And on top of that, I will be closing the week out red on the Bitcoin, and that will be bad. I don't like closing out the weeks red. But I haven't closed out a red week in the last like 8-9 weeks, so I'm due for one, right? It's been a while. Yeah, I noticed that film garden. It was moved to the wrong place. We got it situated at the right spot now. Yeah, it definitely was at the wrong place. Low of day. Low of day. It's literally a 1-to-1 risk to reward. It's not the best trade. But I expect continuation, right? I'm expecting that we'll see continuation. But you're definitely still, no matter what I expect, you definitely stick to the rules of engagement, which means you would take profits there. Get your risk out of the market. But you're playing with a much wider position, so naturally you hope for continuation. We always want continuation, but we don't always get continuation. This was a rather large move on the dollar, much larger move on the dollar than Bitcoin took off of that news. Ultimately, I think it's going to be good for us, as I want it to pull up in the year and then instantly roll over and then give us that downside expansion. That is a big, big number. But we did go back in history and we did see that The last time a big number like that happened, the market did the exact opposite as it should have. Because market participants will use news events to essentially enter positions they missed. Excuse me. I think that's enough coffee for today. Right, so the entire FOMC meeting move has been retraced, and you are right back above monthly support. So let's fib this. Hoping that that this number is where it is the right place to be. This is a 50% correction from the yearly opening range to monthly support. So you will find people trying to sell the dollar here. That's why I'm saying, like, no matter what it should be doing, it may do something different. Yeah, I don't know if I like the buy on EuroCAD. I don't like the fact that it's revisiting this area so quickly. And it's been struggling to break out from there. Right? It's been here for weeks. Weekly resistance is still holding. So that's a lot of selling going on up there. So it does look like people are anticipating this rally to continue or to be faded. Ultimately, macro stuff. Looking for a larger selling opportunity on EuroCAD. Whether they're looking for euro weakness for 2023, ultimately, whoever wins will be the direction we trade, right? Whether the bears or bulls, we don't care. We're not one thing. We do what the market says to do. And right now on EuroCAD, it's looking more and more like you want to be a seller. But as long as support is holding at one spot 45282, you still got to look at it with objective eyes and say that it is still a buy. You want to take the subjectivity out of the trading completely. Get it gone. You'll find out that you have much better entries. You need to quit smoking first before anything. I know I'm working on it, Ellie. You will be pleased to hear that my smoking has decreased. I am working on it. I know that doesn't mean nothing, but I am a procrastinator also. So why do what you can do today when you can put it off till tomorrow, right? It has been the hardest thing in the world for me to quit doing for whatever reason. And there is no value in smoking at all. None. There's no benefits, no financial benefits, no health benefits. It's all con, no pro. Humans are habitual creatures. We form habits, and they're usually bad ones, right? I don't even know if habitual is a word. If it is not, then that's going to be chalked up as a trade talk dictionary. Look for that 2024. That's a joke. um, I've heard there are a couple prescription drugs that are very helpful in quitting smoking. There's a lot of them. Chantis being like the one I see on TV all the time. Looks like Euro USD getting that pullback finally after a very big bullish day. So you have indeed created a top up here on the euro. So it does look like weekly resistance is holding for now. Might be a selling opportunity on the euro right there, 108.546. I don't think I would take that sell. I would much rather get it at like 1.08876 because you can clearly see hourly support there. But also potentially a buying opportunity at 107. I mean, we just have to give this market time, and it's right into the 21. So I would not be a seller there on the euro. 5 minutes until the open, and I don't want to see this. I want to see this thing reaching back up to supply. Oh, it may not give us the entry we want. Because it did touch support perfectly with that tag right there. Oh, in hindsight, we should have taken that entry. There's your fresh low of day. So not what we wanted. Tesla, please. Pre-market, you're gapping down. That's going to be based off of the job numbers. First intraday or first intra-week support 166. Next support I would be a buyer at would be 126. Yeah, I mean, Tesla's had a nice rip to the upside. It needs a pullback before you can be a buyer on it. Maybe a pullback down into 130s. And even as low as 118, I'd still be a buyer on Tesla. Under 118, I would not be buying Tesla. As long as you're above it at those daily support areas I already mentioned, you could potentially buy it. All right. You could be a buyer there. $127.17. I know I don't like it there. There's a gap here, so maybe there at that old resistance, 143. Let the gap get filled, then look for potential buying opportunities. It's hard for me to, John, it's very hard for me to get every single question. If my name isn't highlighted or something, I mean, there's a lot of comments to read there, buddy. So just please have patience with me as I am trying to get to them. But that's the Tesla chart right there. You don't do anything on Tesla until you get to at least 143.75. Can you speak to the retracement levels? The dollar has retraced to the 50% level. What does that mean versus if it retraces to 618.382 or anything to read in those levels? No. Zach, Fibonacci is like every other thing in trading, right? It works sometimes, sometimes it doesn't. I use fib levels because of a lot of other discretionary traders look at fib levels. What I was fibbing here was the yearly opening range down to monthly support. Nobody would have fibbed that. Basically, what people will be fibbing more or less would be your yearly opening range down to your current yearly lows. Current yearly lows on the dollar are right there. The only fib levels that I care about are the 50% and the 618. I only put the 702 there because apparently some other YouTuber person has it and people want to see other YouTubers' stuff on my channel, and I don't know why. But I don't care about that number at all. These are the only two numbers that I care about. And the reason being is because typically in trending conditions, you will get retracements of price legs that will run roughly to back to the midpoint or a little lower at times, and that would be the 618, which is the magic number, right? The 618 retracement, that's your magic fib number. So people think it has relevance in trading. Therefore, they will place orders there based on that. I have a video on Fibonacci if you want to check it out. It's called Fibonacci. That's the title of the video, I think. How to properly draw and analyze fib levels. But I mean, it's part of price action, right? It's part of price action. The best way, in my opinion, to fib is to fib ranges, nothing else. So, like, if I was looking to sell based off of this candle, then I would be a seller as high as the open of last month. So that what that means simply is the dollar can trade all the way back up to 103,494, and I would be a seller there. Anything above that, then I have to start thinking that there is a directional shift, at least on the monthly time frame. I would not put the low year wick in, because this is the low year wick right now. It might not be the low year wick next month. This candle is done. It is set in stone. There is nothing more that can happen to this candle. That is why you fib only that candle. But that video goes in depth on the technical way to use, the right technical way to use Fibonacci levels. Like I said, you'll see some analysts that will fib this whole entire move, and they would simply call that the bear market decline and be looking for a pullback as high as 109.35. But that's more macro, right? That's more macro. If you look at this bullish push right here, you never did ever get a retracement on any price leg. And the price legs must stop once the direction changes. So, I mean, I don't see any relevance to fibbing this entire move. I don't. Other people do. So, like, from May 2021's lows all the way up to last year's high, you fib that range, and you're coming into the 50% retracement right now. So a lot of macro analysts that use Fibonacci are going to be buying the dollar because of that, right? Simply because of that. There is so many subjective ways to use Fibonacci. What I want you to focus on, what I think, what I know will make you a better trader, is when you focus on objective stuff, not subjective stuff. The subjective stuff is where traders get screwed up. If it's subjective anyways, then it's just art. There's no fact behind it. It's just art at that point. You are a technical artist, not an analyst. Subjectivity is the most crucial thing to get rid of. Once you start using objective levels and then become consistent in the way that you place entries, you can then start to build a successful trading career. Before you can become a consistently profitable trader, you got to become consistent, and it's impossible to be consistent if you're trading off of subjective stuff. I'll just say that and we'll kill it, right? As there'll be a lot of people wanting to argue to me that Fibonacci is not subjective. The number itself is not subjective. It's the way that you use the tool. That is subjective. If you use objectivity when you do it, then it helps a little bit, but fibbing last month's range only, low to high, and looking for a retracement to there is just the way I work, because it's the way I see the market, what it does, how it operates. For instance, if while we're waiting for a test, let's let this test come in first, but if you were looking for a place to enter a bull market, notice how I only fibbed the month of September, because obviously September was a very bullish month. Why was it very bullish? Because it broke out above this objective resistance right there. Hence, very bullish month. Okay? And it broke out above objective level. Fib that. Look where the wick came to on the next month. To me, that would have been a buying opportunity. And it was on the dollar. A, because you had objective old resistance. B, because this is the midpoint of your breakout candle. C, it's the 50% retracement. So you got your pullback. I can teach you a few things, man. You just got to stick around with me and deal with the annoying stuff like my slow talking and all that, which is what I get the most complaints about. I sound drunk or whatever, but there you go. It did not tag it the level we want, but it is the time we want. It's 9:30. It did not tag the level. However, it did tag the low of the candle. So let me see here if I can get an order filled at support. There we go. I'm going to go ahead. Here we go. We're getting a push. Let's see. We're going to tag it. This is the level we want it tagged. We do not want to see bullish aggression up above that level. We do not want any bullish aggression in here. We want prices to simply roll over here. Show us that the sellers are in fact stepping up. Low of day is your profit target, 23,229.95. 23,229.95. There it is. We have tagged supply. So now I want to see a bearish reaction. Not a bullish one. Just give it a second. It's still playing games. Very small range candle as far as the daily goes. You're trading well into supply here. When it does that, then we have to think that it's coming back to resistance. But there's 17 minutes on this close, so just give it a second. There's no need to panic. There's no need to take the position just yet, especially since it did not do what we wanted it to do. That is crucial. It is doing not what we wanted it to do. That tells you a whole lot, right? All right. So resistance is 23,536. If you're trading this far above supply, that says the market might want to hit resistance again. It might want to test resistance. As long as you're closing under it, you can still look for the sell trade. However, I don't think I like it because you're well above any retracement level at this point. At this point, you're looking more like the market participants have bought the low. Big volume spike there on the hourly. It has not changed on the 5-minute yet. So there's a check of resistance on the hourly. You can take a swipe at it right there if you want. That gives your risk a lot tighter also. High of day is your risk. So if you think it's going to go lower, this is where you're looking for your entry. This is your stop. That is hourly res. You got how much time left? 15 minutes on the close. Closing above supply would negate the trade for us. But if resistance is still holding, we still kind of dig it. A close under supply, and we love it. Essentially, what you've done is you've retraced the entirety of the move. So this is the market testing to see if it's really supply or not. In a sense, pricing out any discrepancy. That's a good reaction off of resistance for a sell. I like the volume spike up there. Like that. As it does say that it does look like people absolutely had orders setting there and they were filled. And I can't imagine people having buy orders setting here for any reason at all. You don't want to see any trading above 23,536. And there you go. So now it looks to me like price is looking for the high of day. Going to the high of day. Insane. You have a bullish engulfing on the hourly. You took out the low, made fresh daily low. You reversed. ISM is in 15 minutes. What crazy price action. It is clearly just liquidating everybody. You got a fresh low high of day, or do you? Yes, you do. Resistance is here. So you can take that sell and risk the high of day if you want. 23,542. Upon closure, you can wait for the close, make sure it closes under, because a close above resistance is going to be very bullish. You just made a fresh high of day after making a low of day. That is typically a bullish signal. But since today's range is so small, this could be the market just liquidating everybody. The DXY is not showing us that same thing. But you are back to green on the day on the S&P 500. So you're into resistance on the S&P 500. If the sellers are going to come back, they should do it here. Tesla opened up and immediately shot up. I still think it's a sell trade, but we'll see in 10 minutes. If you want to risk the high of day, you can, because you did liquidate it. It's your call. It's your money. It's your call, right? You liquidated the high of day on Bitget as well. So that stop would be 23592. I took an entry at resistance. My stop is the high of day. My profit target now, since the market did what it did for me or for us by doing this, would be 23,341. So my position looks like this. It's a 2.4 to 1 risk to reward. A close above that resistance, unless it stops me out first, will have me exiting the position. You can see that this volume spike is getting bigger. It is reaching further. Once it gets beyond this point, then this red line will migrate up there, like it has already done on the hour. You can see on the hour it has already migrated up. And that's hourly res. This is very, very strange price action. So now, I mean, It is what it is. Do we close the week out red or do we close the week out green? Time will tell. We'll have a better idea in 7 minutes. ISM is at 10 o'clock. So you might want to wait until after 10 to deploy that position. Because that could bring in a whole new that could bring in a whole lot more volatility. That therefore you're not safe. Right? It's not safe. What is the dollar doing? The dollar looks like it's just doing a pullback to continue with the original move, which was higher. So if this is telling the truth, then this should ultimately roll over and hit targets. If this is lying and then it ends up dropping out of sight, then this bullish move is going to be the move. And then you will likely see bullish continuation for the rest of the day. And that would get you up to daily res. This daily res up here is also weekly resistance. So that's the only other place you could look for entries. You should not need to get up there. So I don't know that I would want to take a sell trade up there. Could ISM force price all the way up there and then reject? Yep. Because all in all, on Bitcoin, you're at 0.10 of a move today. You're unchanged on the day. And your range is less than 1%. So it's not as much volatility as you think. It looks bad on the small time frame is all. The bad part about this is we had such a massive beat on NFP. ISM man, ISM could really screw everything up. And ISM is in 3 minutes. A higher than expected reading should be taken bullish for the dollar. So anything higher than 50.4 would send this up. Supposed to, naturally, send that up. But you have the news, and then you have the market's reaction to the news. This is the reaction I expected with the number we got. I did not expect this. So the market is being very shady. This is what we call random market violence. When you think one thing is going to happen and something else actually happens. Random market violence. A close back down in here would be really, really good. And then naturally a higher number would be really, really good. Like 50.5 or 50.7. A lower number can cause this move to be faded. And then we'll be right back to being whipsawed. But setting a fresh low of day and immediately making a fresh high of day is typically bullish. Typically, it doesn't always end up working out like that, but typically that's a bullish signal, not a bearish one. So just make sure your risk is situated, please. ISM in 44 seconds. Bitcoin right at that level of resistance. I would much rather see it down here than up here. It's a close under. What's the number? We're getting the reaction we want, sort of. Yeah, I refreshed the page and I don't have nothing. So it did come down, but it found support midpoint range. So now what do we do? Do we wait a whole hour to see? Nope. I'll tell you what we do. If this thing doesn't start dropping soon, we exit the position. We can clearly see that the point of control has shifted now, even on the 5-minute time frame. You can see that. That's a big spike. We've been watching this thing grow. That suggests sellers are stepping up to the plate. But that doesn't mean the market will go lower, because now that those sellers are stepping up to the plate, if you get a push higher, then those people will be stopped out and you will likely get a large push up. So what we're looking for is a bearish reaction. I still do not have the ISM numbers. One of you all have to have. Services PMI 46.8. So that should be taken bearishly for the dollar, and the dollar is acting bullish. There it is, ISM 55.2. That's beautiful. That helps our short position Now all we need is for the market to do what it's supposed to do. Thank you for that, Dark Side Dev. Biggest jump since June 2020. Nice. Yeah, that should be ultimately bullish on the dollar. So ultimately, this right here, this spike back up into hourly res, creating a high of day, should be sold into based on that number. But that does not mean the market will do that. As we know, the market likes to hurt the many. It likes to punish the many, not the few. Few people make money in the markets. Most people lose money. Big spike in volume up here at these prices. It, like I said, suggestive of selling. Doesn't mean it is. I can get the actual numbers to see if it's buy side or sell side. I can't see it. Looks like 370 versus 442. So definitely more on the sell side than the buy side. There was more volume traded there, more on the sell side than the buy side. Still doesn't mean nothing. Alls we want is a push to here before a push to there. Right? Then we can exit our risk, move our stops to break even. And then if we get downside continuation, we will be positioned nicely for a larger move lower if that occurs. But the buy the dippers can screw that all up. You did close under resistance with this push, but you also closed above supply. So on a technical rules-based part of my strategy, that would tell you to exit the position. And the reason being is if supply was here, you would expect a close under it. So, yeah, we closed under resistance, but we did not, and I repeat, we did not close under supply. And supply seems to be acting as support. Daily rise 23,745. Twenty-three, 3,348. And the number that I'm looking for on the Bitget platform, if you're trading with me on the Bitget platform, your take profit will be above 23,343. So I would set it at 23,350. Take profit. I take 70%. You can take as much as you want. 23,350. So let's set this at that price. And then let's make it green. The dollar's ripping. So, I mean, in reality, this thing should be rolling over for us. I'm going to sit down for a second. I got a standing desk, but it makes a lot of racket. So I'm going to mute you for about 3 seconds. All right, there we go. Get off my feet. Yeah, the dollar's having the reaction that we would expect with today's numbers. Risk and Bitcoin is not reacting the way we would expect with today's numbers. That is so weird. So very strange. And it's volatility out there. Volatility mania. Look at it. It's a tight ass range. You've liquidated both sides. Maybe it's not done. Maybe it 1 hour stops next. And then you get a candle that just drops out of sight. It would be nice if I could see the future. Unfortunately, I can't. Tesla doing good, holding at 5-minute supply. Dollar ripping faces off. You got a fresh daily high of 102,902. 10. Just kidding. Younger people won't even get that joke. Yeah, dollar is absolutely moonshotting here, which should ultimately have this. This should look like this, but in the opposite direction. And it does not even look remotely similar. It's concerning, to say the least. And now you got a higher high on the 5-minute. Not what we want, man. We want lower lows, not higher highs. I don't know. I can't tell you why the market's doing anything, John. It doesn't even mean the bulls are stepping up. It simply could mean that this new volume spike that we got up here created a whole new load of liquidity. So the market is just simply stretching for those stops now. Or it's just being bought up for whatever reason. This is not the reaction you should be getting. Since you closed above the hourly supply, remember this is hourly supply, since the market has showed you, for the last 20 minutes, it might be wise to close the position. Depending on where you got your entry will dictate whether or not you close it with a win or a loss. But this is very concerning. It looks to me like it's going to run above the highs. On this push right here, we should have at least pushed down to our target. We did not. We are going in the opposite direction. Risk doing the exact same thing. In fact, your hourly candle is bullish. That does not look good. First 15 minutes of the hourly candle, what did it do? It came down, settled low. I would close the position. Just the fact that it closed above this line is usually our indicator that we don't take the trade. Because it typically means that this line is going to come back into play. So, I mean, if you're willing to still lose the money, I mean, you were willing to lose the money when you put the position on, you can leave it on. But if I get into profits probably just enough to not go to the week red, I will close the position. Just to save a neutral week or close to neutral. My entry is much higher, but price is pushing much higher. So, yeah, at this point, it's just to break even. It's going for the highs, guys. Just another random market violence day where nothing worked out the way we wanted it to. Yay! Those are always fun streams. I definitely would not attempt to short this again today for anybody that watches this video later. If you're seeing this and you're like, well, now it's going to go lower, I would not do that. If it was going to go lower, it should have. You're seeing this is going to be a bullish expansion candle. So you know how I say like the first part of the week usually sets the low of day. The first part of the day usually sets the lower high of day. I meant week. The first part of the week usually sets the lower high of the week. The first part, that happens that way on every single aspect, on every time frame. Notice the first 15 minutes of this hourly candle. That's the first quarter of this hourly candle. Notice how it pushed down. Now you're getting a bullish expansion. So the first part of this move on this candle was lower. That was the fake out. Here comes the expansion, and then ultimately you'll get maybe the daily res and then fall. I don't know what's going to happen. But nonetheless, this should have been a lot more bearish than it was, because that was a big jump on non-farm payrolls. A big jump. $517,000 when 185,000 were expected. Another argument could be made that the market is reaching up here because there's more liquidity setting up there, but still at the same time, it's one of those things, right? This right here is the important part to take away from today's stream. This closed above this. And if we were going to see downside continuation from this, as we've seen so many times in the past, price should have simply traded to there and then rolled over. It didn't. It closed above. And that usually negates that trade for us. The reason is because it means there's a high probability that price wants to go back and test this. And that's exactly what it did. Then we have the first part of the hourly candle pushing lower. I was just hoping it would push down to here, even if it does want to go up. But it didn't. And there you have it. So the market gets the news that should have been extremely bullish for the dollar, and Bitcoin initially sells off on it and then is bought up. But you can continue to watch it around daily resistance today. This is daily resistance. This is your last level for selling. No other selling levels up there. That is it. Right there. That is it. You are currently up on the day almost a whole percent. So you went from being down on the day 0.8% to being up on the day 0.8%. Pretty volatile day. You're still up almost 0.8% on the dollar. And Bitcoin is getting bullish on a very bullish dollar. Risk is being bullish with a very bullish dollar. One of these assets are lying. Or these two assets are lying. One of the two. Either the dollar is in the process of being faded, which is possible, which is possible. It's hard to believe when you print that much of a bullish engulfing weekly. And today's the close of this bad boy, too. It's hard to believe that this is the fake out move. Did you liquidate that weight? You did. So maybe this is the scenario right there. That's where the selling took place on the dollar. If the dollar struggles to get back above 102,899 today, then Bitcoin's going to push above daily resistance. Because that would suggest that sellers stepped up there. Never would have dreamed that. Not after being so deep under monthly support to come all the way back up and take out 2 weeks worth of liquidity highs for the sellers to step back up, leaving a clear path to test the yearly open again, wide open. If this thing closes red, it's going to be one of the weirdest things ever. You got to keep in mind that we did have FOMC and he was really dovish. That is why you got buyers stepping up down here. More than likely. Where can we exploit this? Can we exploit this? I think we can. Maybe. And this could just be an initial, like I said, who knows what's going to happen? Who knows such things? Spy running to 420, yeah. Yeah, it's insane. But you're coming into resistance on the SPY. Don't necessarily want those moving averages up on an hourly chart. So this thing tested a 21 exponential moving average, and you are getting a bullish reaction from it. You do have daily support here. So, I mean, technically, as long as you're trading above 1.08486, it's still a buy. It's only once you lose that on a closing basis. So we'll have more data today. We'll figure out where these things close up, how the weeks end up closing. We got a lot of data this week, so the market's going to take its time in digesting all that data. We'll have a lot, you know what I mean? Like, we'll be able to see a lot more going into next week. We'll know more. Next week will be a better week, as it always is. There's always more opportunities And we have a much higher much higher win rate than loss rate. So next week will be the week. There's very crazy stuff going on today. At 11 o'clock, either your high or low will be set for the SPY. You got daily res at 416.78. On Bitcoin, daily res will be 23,735.97. And as of right now, your support 23,493. The 2 hour is a nasty bullish engulfing. So can you buy 23,493? Well, that's a decision you will have to make on your own. I was expecting pullback. You're coming back down to 108,486 on the euro. See if it holds. I can't get we did figure out a way to get that volume, didn't we? We did it by going to capital.com as they provide TradingView with volume metrics. Yeah, big volume spike happening there as well. Here, currently where you're trading, it's a nasty looking 4 hour, nasty looking 8 hour, nasty looking 12 hour. The daily's in line with what I would expect, but not with the data we received today. And that's also weekly res. So looks like Bitcoin wants to close the week unchanged. You're definitely trading higher. You know what I mean? You're trading up off the lows. So if you fib this candle here, you're going to see that, yeah, it's going to close bearish if you close under daily resistance. If you close above it, you're going to be bullish on the week. And that would definitely have everybody expecting more upside. The market's just getting right back into the range. This is daily support, though. You want to mark that for sure. As far as the intraday levels, I wouldn't pay too much attention to them today. Because of the news. Let's see how she closes up today, and then I'll get started on that video. Thank you guys for being here. I'm done for the day. I'm going into the week red, which is fine. I'm okay with it. It's been many weeks that I've had green weeks, so occasionally I have to eat losses too. That's just the way it works. So yeah. Thank you guys for being here. Make sure you guys trade safe. Make sure you trade smart. And as always, happy trading, everybody. Look out for that video. Should be a good one.